Good afternoon and welcome to BizTech's ASEAN Midday Market Watch. On a special edition of Midday Market Watch on Christmas Eve, we take a look at REITs and tech stocks and ask the guest today, Gabriel Yap, Executive Chairman of CGP Global, to give us his insights. Gabriel, welcome to the show.
Thanks for having me, Brian. Merry Christmas as well as to your viewers.
Now, let's take a look at, before we talk to you, Gabriel, let's take a look at how markets are doing on Christmas Eve. Now, overall, it looks like a sea of green. The Nikkei is at 26,627.97. It's up 0.39%. Now, the Shanghai Composite is down slightly at 0.21% at 3,375.21. The Hang Seng is at 26,386.56. It's up marginally at 0.16%. ASX 200 is at 6,664.8. It's up 0.33%. The Kospi is up quite sharply, 1.36% at 2,797.36. Now, closer to home, we've got the Bursa Malaysia trading at 1,642.54. It's down 0.3%. And the SGX is at 2,842.04. It's up 0.3%. Now, Gabriel, what's your view on markets on Christmas Eve, especially with news out of China that there's going to be increased scrutiny on the large tech stocks like Alibaba? Their shares fell 8% in this morning after reports of an anti-monopoly probe by China.
Well, first and foremost, the anti-monopoly probe on big tech in China, as well as actually in the US, but of course by different authorities. So let's talk about the China one. It's not unexpected. I think with the postponement of the end IPO just last month, I think the next that was being reported out of China, according to many of the agencies, including Xinhua News Agency, China Daily, I think the market's been prepped for essentially anti-monopoly probe into the big tech companies. So they include Tencent, Alibaba, as well as actually the other e-commerce players, which seemingly actually have monopolistic powers. That includes in terms of pricing, that includes the likes of Pinduoduo, Xigua, as well as actually the likes of Meituan. So that's been talked about for a while. So I'm a little bit just surprised that the reaction on Alibaba per day share price fall, that's a little bit on the high side, because it's not something that's new. It is something that the market people have been anticipating it.
So given that scenario, long term, are you still bullish on these China tech stocks? And if so, then which one would you recommend?
Well, first and foremost, one has to understand that the impact of the probe is that if it's actually found guilty, most of the tech stocks, as what you've seen in Google and Facebook, they will actually be slapped with fines. Now, in the case in Europe, for example, the EU is actually pushing for maximum fine up to 10% of the big tech revenue, but that's not been passed yet. In China, the current legislation is very clear. You can only fine up to 500,000 renminbi. That's basically 100,000 Singapore dollars. So this is actually what we say peanuts, in the bottom line of the big tech company.
Yes.
I think what is actually more important is to bear in mind essentially this probe. If indeed some of the big tech are found guilty, then what are the more qualitative repercussions? Because the quantitative repercussions essentially is definable, and in this case, you and I know is actually limited, unless of course, the law is actually being changed. But then again, it is unlikely the law will be applied on a retrospective basis, So even on that basis, the other aspect that one has to be taken care of is the kind of business that actually lead to the antitrust probe. The antitrust probe only comes in because you're just too big. So does it mean that, like in the case of the proposal in Europe, is actually to break up US big tech, is actually to break them up into different components. Like, for example, if we try to break up Alphabet, it could go, YouTube could be gone, and very different from the search engine. So how does it actually apply in the big tech in the likes of, for example, Alibaba? Can you actually hive off China? That's the logistic arm from, say, Alibaba Cloud. From the e-commerce arm that's under the Alipay and Tmall and Taobao. Because all these are actually integrated. See, so all this have to be very clear before the share price. Share price in the short term will always be just a voting machine. In the long term, it is a weighing machine, taking into account all the factors that I've just shared.
And also, I think one of the things, Gabriel, we need to keep in mind, as much as we are worried about the risks, the Chinese government has allowed these companies, these large tech companies, to basically become, well, not just local champions, but grooming them to be global champions. So I think from a risk management perspective, you wouldn't think that they would sabotage those greater ambitions and penalize their own companies too much. They may penalize Western companies, but probably not their own companies in terms of anti-monopolistic investigation and punishment. So, I mean, that's from a risk management wise, I would think about it and say, okay, yes, we are worried about investing in these guys, but we've got to keep in mind that they're not going to kill the goose that's laying the golden egg for them.
Yeah, I do share that sentiment, because, Brian, the thing is that the trade war between the US and China has also and will have a big bearing in this discussion. So, because ultimately, if the US is going to win or the China is going to win, China needs to have the big tech on its side, because should actually the US side do something acrimonious, for example, then many of the big techs will become the poster boys, as they have become, in listing in Hong Kong, or listing in the Star market, or listing in the Shanghai market. So these are the ones that will carry forward, the Chinese big tech names going ahead. So the key thing is that, one has to be very clear on the legislation. Two, what does the legislation cover? Three, which aspects is actually anti-monopolistic in this case. And then, yes, if found guilty, you can be fined, but that's about it. See, I mean, the current operations of most of big tech, you have to understand, are actually very profitable. So for example, Tencent and Alibaba has been profitable for the last decade. The likes of the new ones like Pinduoduo and Meituan are still making losses. But on an EBITDA basis, for example, Meituan has already guided that come next year, they would be able to possibly break even. But then again, if you go one step further and do a cash flow analysis, then you will realize that the cash that's sitting on both Pinduoduo, Meituan, as well as Bilibili, that's also listed in the US, they're more than $1 billion US. So depending on basically your burn rate, and even if you're assuming the worst case scenario, you notice that essentially the cash will still be there, for these companies to actually continue to trudge out, the turf war that they need to do in the e-commerce field.
Now, so Gabriel, if I'm one of our viewers and we are looking to get into China tech stocks in 2021, which are 5 stocks you would recommend that we should be accumulating or buying for the first time?
Well, our perennial favorites actually have been Alibaba and Tencent. So Alibaba, despite the sell-off today, I really think that it's probably one of the best buying opportunities. I myself actually just bought a little, then the other names that have done very well in our investment classes, which we have actually shared with our students, investors in our classes. Earlier this year are actually an e-commerce place that includes Pinduoduo. The ticker code is PDD, that's trading in the US. Bilibili, which is actually the ticker code is BILI, trading in the US. And then 2690, that's actually Meituan, that's trading in Hong Kong. Now this e-commerce stock actually zoom up a lot because of the work from home beneficiaries. So they're just taking a breather at the current juncture, but I see greater upside for them, in the years to come, simply because if you see how they actually do in terms of the operational numbers, so whether it's actually MAUs, that is actually your monthly active users, AAC, which is the active daily accounts, that these companies are actually bringing in, you notice that these numbers are climbing steadily, and you can see that the network effects of their network, that of their e-commerce side is actually drawing in a lot of people. So, for example, like Pinduoduo basically started trying to be a group buy, something like a Groupon kind of buyer, and they've got
Yeah.
aggregation numbers and they brought people down. But right now they've expanded into Meituan, Pinduoduo Thai, which is actually they are focusing more on the farmers, and this is actually the farmers in trying to bring the produce to the first tier, second tier cities, and this is something that the government in China actually promotes. So Pinduoduo actually benefits along this particular line with this segment itself.
Now, Gabriel, thank you very much for those insights on Christmas Eve. We appreciate you coming on the show. We've been speaking to Gabriel Yap, Executive Chairman of CGP Global, on the ASEAN BizTech Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations.